Okay, welcome to the Top-Down Charts Substack onboarding video. In this video, I'm going to show you the two key reports that have headed the service and walk you through how to use them, or what's in them, and how to get the most out of the service, and also what else to be looking out for with the service in terms of how you can get maximum value out of it. So the first thing that we're looking at here, and the first thing that I wanted to take you through, is the monthly asset allocation review. And so the purpose of this report here is to take the key outputs from the market cycle guidebook. So this gives you a clear snapshot of our thinking on asset allocation. And yeah, let's look straight into it here. So the first part there is basically a bit of a forward. So a bit of a here's what's been going on, a bit of context. And I guess you can see there that the last line there says, the macro value cycle models and asset allocation frameworks say overweight bonds, underweight stocks, and risk assets. But getting more into the charts or the details of it, these first set of charts are really valuable, I reckon, because what they do is they basically take the world's data and present it into a single set of charts that give you a high level view of what's going on. So the first one here is the business cycle macro scope. And so again, this is looking at soft data, hard data, and inflation data trends across as many countries as it's available for. And you can see there that it actually looks quite intuitive in terms of the way that they're acting with regards to the business cycle. So, for example, if we go back into 2004 there, we can see that the soft data turns up first, then the hard data turns up, and then the inflation data turns up. And that's conceptually what you tend to see through the various cycles. And so obviously right now that's quite interesting because the soft data is trending down sharply, the hard data is tapering off, and we can't quite see it there because the inflation data is off the charts, but it's actually begin to stabilize at high levels there. And so this little panel to the right there is saying what is the latest observation. Is it strong, weak, or kind of in between? And then the trend is whether it's getting better or worse or kind of stable there. Pretty good way to just keep on top of the world's economic pulse there. And then very closely related and very important, perhaps more than usual in these times, is the global monetary policy pulse. And so this is just showing you there the number of rate cuts in the green, and number of rate hikes in the red there. There's a lot of different indicators that I've got on monetary policy, but this kind of just gives you this is what's going on. But importantly, as a companion to that, you've got the table there which shows the policy stance, and the current stance. And so, for example, the Fed there is in a tightening stance. And then in terms of the bias or the outlook, and so the Fed is, still hawkish there. So that's pretty self-explanatory. And, the more red, I guess at a high level there, the more red that you see on both of these two tables here, the generally worse it is for risk assets. And the more green it is, generally the better. The valuation snapshot, again, doing a similar sort of thing, but looking at valuation. So the chart there that's kind of in focus is US equity valuations because, let's face it, even if you go global, US is still pretty important for setting the tone. So we've got the blended PE ratio in the black. That's kind of your absolute valuation metric. And then the relative valuation metric, so the equity risk premium there inverted. So if both of those lines were really low, that would be very cheap levels and very compelling. And we can see pretty notable examples of that. On the other hand, if both of them are high, then that makes things more challenging. And then again, what I've done is create a companion table there which shows you an assessment of valuations across US equities, developed equities, emerging REITs, commodities, treasuries, gold, and showing it versus history. That's like your absolute valuation, so the black line there, and then versus bonds, for example, for the equity risk premium or yield spread, and then versus their peers, which is just for US equities and the rest of the equities there. So again, that if you just looked at these three charts every month, that would give you a substantial advantage over most people that are kind of just following the news or the noise, trying to figure things out. So that by itself is pretty powerful, and that's kind of how you would use it. The second bit there is just a snapshot of where things are sitting in terms of market performance, what just happened on the month. Um, you know, this is kind of just a context kind of thing, and also just giving you visibility of what's going on. But sometimes it can be actually quite useful to see, like if what we often see in financial markets is if everything's down, 1 month, or if you've got something that's really down 1 month and some really high ones, you tend to see them flip around a lot from month to month, so it can be useful at the margin. Then we've got here the global economic outlook. So this is just my assessment of the world, the risk backdrop. So what are the key risks that we're navigating and that are kind of on the horizon. And then this one I think is quite useful too. It's what I call a cheat sheet on all the major asset classes. So you've got your short-term view, which is basically months, weeks or months, and then your medium to long-term view, that's basically years. So all fairly self-explanatory there, I think. So you're looking at the major asset classes and then the views there. Um, Asset class ratings and TAA guide. So this is really a companion to that one. So the table here shows you essentially if we took all the analysis that I've done and map it to an active asset allocation tilt. So for example, at the moment it's showing underweight to equities, underweight to commodities, underweight to property credit, basically all your risk stuff, and overweight to cash and bonds. And that's reflecting it's reflecting the views in this here sheet. It's also reflecting kind of the macro input that we looked at there. But really specifically, it's reflecting the asset class ratings here. And so I do show you what it means here. But V, so that's valuation. Red is expensive, green is cheap, and yellow is kind of neutral. And then you've got a cycle. So basically, good, green is good, red is bad. And that maps across the other ones, so monetary policy or monetary conditions, sentiment, technicals, and then your sort of total score. And these are qualitatively put together by me, but sitting behind that is screeds of quantitative data, indicators, charts. A lot of stuff goes into coming up with that little quilt work of colours there. So basically, I've gone and done all the work, so you don't have to. I kind of gone and looked under every stone, and this is what I've come up with. And then and then in that sense, this tactical asset allocation guide here is not just let's make this wild call to go overweight equities on our gut feel. It's based on the sum of the evidence. This is we would simply end up. And so, in terms of how you would use that, if you were constructing a portfolio from scratch, you would, basically look to reflect that. So you'd have less equities, more bonds, cash. Or if you already had a portfolio, you might reflect that in it. So, you know, um, the way that the service was originally put together was for active asset allocators, at pension companies, fund managers, etc., where, and financial advisors, where they already had a strategic asset allocation. So, like, they might be, in the very simple form, it might be 60-40, 60% equities, 40% bonds. And then if they were looking at this, they would be like, okay, well, we've got to trim that back. Maybe we make it 50 instead of 60 and 50 instead of 40 for bonds. That's basically how you would reflect that into an existing asset allocation. And also in general, sort of input in terms of risk management. So, if I've got a thing here that says, be massively underweight equities, and you've got massive equity exposure, then you probably want to factor that in, or at least, use it as a prompt to go and do a bit more homework. Now, the last section here is the longer term view. So again, the red dots, I should explain that too. The red dots in this table are the shorter term view, so less than 1 year. And the blue squares are, or the coloured squares rather, are sort of medium-term view. So, I mean, in practice, that's 6 to 12 months plus. But the capital market assumptions here for for your longer-term view, so 5 to 10 year forecast. And you can see here it's been developed across the different asset classes. Uh, at a high level, it's generally based on yield plus any valuation, mean reversion, and any growth input as relevant. But I guess there's a couple of things to note here is one, just looking at the expected returns within the different groups. So, looking at fixed income, clearly you can see that the higher expected returns are in generally the riskier pockets, so high yield emerging. Uh, but also looking across the table and also actually within equities, so you can see that the rest of the world have the higher expected returns versus the US, for example, and that's specifically down to valuation differences. But at certain points in the cycle, these are going to be looking quite different. And look the sort of the landscape of this, if you would. So, for example, back in March 2020, all of the fixed income side was very, very low because yields had basically collapsed because of all that safe haven demand. Meanwhile, equities, because valuations dropped so much, they were showing up very high, and so your kind of forward-looking equity risk premium would have skewed you into equities rather than bonds and a more risk-on thing. So um, this is quite good for setting your longer-term asset allocation, and I think generally as a cross-check, again, because if something's showing up quite extreme in this table, or something's showing up quite low in this table, and that's at odds with the way that you're positioned, then that might be a good prompt to go and consider consider things again. So that's basically it. Your monthly kind of snapshot there. I think that this is probably you know if you're really busy and you had to miss the weekly, that's probably okay, but you never want to miss the monthly because of just the way that this should be factoring in terms of your overall risk management and your general longer term strategy. But going into the weekly, so the weekly, just for context, it's taking information from two different reports from the institutional service. So one is the weekly macro themes report, and that goes through and looks at up to 5 different ideas each week that generally span across 3 different categories. So ideas, so actual investment ideas, risk management inputs. So this is a key risk that's on the horizon that we need to be factoring in. Or general macro insights. So for example, here is a good example of that, global policy pulse. Now, in that report, I do have a whole bunch of charts, but what I've done is taken out the key points here. And so, you can pretty quickly read through the key points there. If you don't want to read all the key points, you can read the bottom line there. You can start with the bottom line, which is your conclusion. I usually try to make pains to make that very clear, to the point, and sum it all up, as well as its implications. And then you could go through and read all the detail, if need be, or if you deem it relevant. And yeah, so we've got another example there, the Fed braking process. So, playing a little bit on words there. So that's kind of like an example of risk management. And then this tech rec check there, and that's kind of half responding to some of the client requests I've had around, for example, tech stocks, value stocks here. And that was basically an exercise in looking at whether or not that's the case. Turns out it's not just yet, but at least from that exercise, we now have the tools and the framework to identify when that situation shows up, which it probably will eventually. So that's the first segment there, and then from that report, I take what I would consider the top 5 charts or the most meaningful charts, and I put them down at the bottom here. So if you want to skip through to the most interesting charts first, then you can kind of do that. But you can see here, so for example, emerging markets rate hike pace peak. So for example, we're tracking the rolling sum of rate hikes across emerging and developed there. And And the general structure of this is to have the chart, have a bit of an introduction in the bold, talk about the why what it is and why it's important there, and then your key takeaway there. And so, for example, if we look for the rest of them, we can see quantitative tightening and the implications for equities, valuations there. So again, it's a kind of the risk flag. Housing market risk, that's another kind of risk where it's like it's not tactical risk, but it's risk that's approaching on the near-term horizon. And then again, this is your tech sector element that I was referring to earlier. And now actually, we'll go back and look at the rest of the report, this weekly report. But while we're at the bottom here, these two segments are also from that weekly macro themes report there. So the first one here, this is all the current live ideas or themes where an explicit view has been issued. And I will note this, I don't put a specific idea in here when I've done something that's kind of just more sort of researchy and exploratory and, very interesting and useful, but nonetheless not a clear actionable idea from. But as you can see, there are many actual actionable ideas here. So, for example, commodities being bearish since May, which turned out to be a pretty good one actually. And so the structure of this is you've got the category of things. So it's either an idea, a macro theme, so inflation, for example, the risk or a risk, and then you've got your subject. So whether it's equities, inflation, bonds, commodities, capex, etc. And then kind of your subtopics. So if it's equities, and then China is your subtopic. The direction, so bullish, bearish, down, up, for a macro view. And then your time frame, which is pretty self-explanatory, and conviction level, which I think is quite helpful because, sometimes when you have the idea at first, when the evidence is starting to fall into place, you'll start off lower conviction and then, maybe you'll review it a month or two later, more evidence will have fallen into place, and then you can crank it up to high conviction, which I will clearly spell out, and that's the kind of thing that I would actually spell out back in that first section. So if for instance, if the tech stocks were actually showing up as cheap, I'd say raise conviction, cheap, for this reason, and sentiment, blah blah blah, all that sort of thing. And then I've also got this one here just for reference as well. So this is your closed ideas, and so I've got the outcome there and the return for the closest approximation to whatever the sort of asset or market was. You can see there's so far so good. We've got more greens than reds on the outcome there, so that's always a good thing. So it's a good kind of vote of confidence in terms of the accuracy or usefulness of it. So that's that. We've got the ideas summary there, the charts, and then back at the top we've got the details around those ideas. So, and again, just also noting here, you've got basically the description or the topic title and kind of like a high level sense for it. And then you've got the details in your bottom line. Now, the middle part is coming from the global cross asset market monitor. So that's something I do on Mondays. It's just kind of like a kickstart for the week for clients, and essentially what we've got here is in the price part. This is basically a bit of commentary on what's happened over the last week or any sort of observations of basically the product of looking at 100 plus charts across different assets, different markets, different countries, geographies. For instance, you've got emerging markets there and Euro stocks. And basically, it is commentary based, but we put in basically any charts there that are of particular note. So, for example, the emerging markets there breaking down. Same thing for Euro stocks. Treasury yields clearly clearly pretty interesting stuff going on there. So again, that's kind of like context setting. So giving you visibility and giving you an easy way of catching up on what's been going on. And again, it's about saving you time so that you don't have to go, you know, running around looking at all sorts of different charts, going to all different websites and reading all sorts of different news articles. You can just, you know, be like, oh, yep. So equities, commodities, EMFX, those were all down. US dollar was stronger. Okay, yep, sweet. It's pretty easy to get on top of things. And then the second bit there is market theme. So that's it's basically focused on technical price, sentiment, um, information of that nature. So it wouldn't be the same kind of holistic, valuations, cycle, policy, all the rest of it that you'd see in the weekly macro themes report, but it's still quite useful. So here, for instance, we're looking at global equities, and we can see there we're covering all the different technical angles there. Make sure, yeah, and also looking at commodities there, kind of looking at the overall technical risk backdrop here. Also looking there at real estate, for example, and credit, and then treasuries and the US dollar. I think, yeah, the key point of this theme was that kind of all the wrong things were breaking down: equities, commodities, real estate, credit, whereas all the wrong things were breaking out. Real yields, US dollar. So that's that can be quite important, particularly as things are developing in the markets. And definitely, this would have been fascinating in March 2020, for instance. And then sandwiched between that section and the charts is a bit of a radar check. So, any notable data that's coming out. And sometimes I'll put, like, if it's particularly interesting calendar week ahead, what I might do is basically have a look at, provide a little bit more commentary and maybe even a chart or two, if it's particularly notable. And then also just give you a little insight into what I'm working on in the week ahead in terms of the research agenda. So there you have it. Again, going back, the monthly asset allocation review, designed to be this kind of one-stop shop where you can just get a snapshot of what's going on in the world, what's going on across assets, how to think about the different asset classes, how to position, and how to think about the long term. And then your weekly there is, you've got some notable ideas, whether they're macro input, whether they're investment ideas, whether they're risk inputs, your quick rundown on what's happening right now in the markets, some market themes to help flag down ideas or risks, a bit of a heads up on what's on the radar, and some very interesting charts and commentary to equip you to try and help you get onto opportunities, to avoid risks, to save you time, and to give you the context that you need to ideally make good investment decisions. And now, on top of all this, if you ever have a question or any sort of comments or anything around these, there is a comment section here at the bottom, and so definitely feel free to ask questions there, and I'll jump in and answer them as soon as I can. And then aside from that, if you wanted to look back at the archives, you've got access to the full archives there, so you can click onto new and that will bring you up with the most recent ones, or you just go to the home page and that will you'll be able to browse through to there that way. So that's basically a quick rundown on the entry-level service on the Topdown Charts Substack. If you've got any other questions, again, you can actually ask them in the comment section of any of the posts on the Substack there, or otherwise if you go to topdowncharts.com and click onto the Contact Us page, and then you can ask the questions through there. Otherwise, if you're already a subscriber, I hope you found this useful. And if you're thinking about a subscription, yeah, definitely give it a try.